The fundamental opportunity for private debt in the European market really comes from the supply-demand imbalance for credit in Europe. On the one hand, you have banks reducing their supply of credit available to small and mid-market businesses. And on the other hand, as Europe has recovered, you've seen a very significant increase in the demand for credit by corporates. And against this backdrop, it has created a sizable funding gap into which private debt firms are stepping. Those dynamics are expected to increase or accelerate going into 2017 as increased bank regulation will require banks to focus very much on their risk-weighted assets, and unfortunately for mid-market companies, the risk weighting in private debt tends to be significantly greater than investment-grade debt, and that therefore the trend of banks reducing their exposure to mid-market lending is likely to increase. Specifically relating to 2017, there is no doubt about it that private credit and specifically direct lending benefits from a certain amount of market dislocation. And credit events that have happened over the last number of years, be that slowdown in growth forecasts in particular countries, or as we're seeing more recently, turmoil as a result of US elections or Brexit type events, causes further uncertainty, and that uncertainty in turn leads to further retrenchment by banks from the lending market. And against that background of a certain amount of dislocation in the market, private credit firms are able to step into the market and take advantage of it. They are largely able to weather some of the short-term liquidity and volatile issues you see in the public debt markets because the structure of the funds enables them to take a longer-term view on credit positioning. So I would think what you will see going into 2017 is a continuation of the trend of a reduction in lending by banks and increasing uptake by private credit firms, and against a relatively benign European credit market, the ability for private credit firms or private debt firms to take advantage of short-term liquidity and volatility issues will create a significant opportunity.